Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, July 3rd, and happy Independence Day for everyone who's celebrating tomorrow. U.S. markets are on a half session today, guys, so stock markets will close at 1 p.m. Eastern in observance of the holiday, but stuff is still moving and we're still trading. So lots to go over today. As you saw last week, I left off with just a slew of daily charts because the close of the month, the close of the quarter really leaves a lot of these charts and these trades at some extreme levels. And that last flush out with the dollar strength that we saw did materialize right into the end of the month. This is why we were saying let's just stand aside to see how this pans out. But things are starting to get clearer, I think, as we start the week. So um, on the docket for today, one quick note also, there's going to be durable goods orders released at 10 o'clock today. It's going to be the last U.S. print. When we do come back on Thursday, we will be having obviously our intraday strategy webinar, but we'll be getting the coverage of ADP right before, which is typically released on the Wednesday before NFPs. We get because the holiday, we get it on Thursday. So Friday's non-farm payroll report, lots of expectations there. We're looking for prints of 195,000. We also get Canadian employment figures at the same time. And obviously dollar CAD has been something we've been watching with great interest. So lots of stuff to cover still this week. On the menu, DXY, we'll go over Euro, we'll go over dollar CAD from yesterday. Aussie Kiwi did push higher, but finally tagged that last level. So from here, I do want to caution on any long exposure for Aussie Kiwi. I think that side's played out for the near term. Might get a little bit of pullback there. Aussie dollar, on the other hand, actually moved higher. Okay, we got the RBA interest rate decision last night. Central bank held at 2.5% as expected. Biggest focus is they had a little bit more of an upbeat assessment of things, as it were. So I'm sorry, 1.5%. Did I say 2.5%? 1.5% on interest rates. So a little bit more upbeat as far as inflation targeting is concerned, seeing a little bit more gradual pace. And they said that, accommodative measures remain in play for the market. So nothing really new there, but the dollar pullback certainly giving lifts to the Aussie. So we'll be checking that out, as well as the British pound. Anything else that you would like to cover or didn't hear mentioned, feel free to throw it on the message board at any time. Just as a quick reference, heading into the U.S. trade session, guys, the Aussie is actually the best performer versus the U.S. dollar, followed by the pound and the Kiwi. The dollar is lower against all its major counterparts coming into the open here, okay? So something to take note of and something we've been looking for a couple of days, so it's finally good to see it materialize. Let's start with the DXY. Here's what we looked like last week. And again, all these daily charts are really to focus on where we closed the week. And here's what it looked like on the daily chart. Daily chart, you can see to the right, again, showed a failure right ahead of that high. We have basic slope resistance, same parallels, all originating off of this slope. Okay, all those parallels have been very nice pivots in price. Call it the highs, raise ceiling type of scenario, again, failure. The new high day close comes in at 95.32. On any topside advance, I don't want to see price, go higher than that. If we beat 95.32 on the upside, that's my bearish invalidation for the pullback scenario. At that point, you could see 96 again. You don't want to be sitting in a trade 70 pips upside down. So broader bearish invalidation level remains unchanged. Remember that the weekly chart for the DXY did close again below the long 200-week moving average for a fourth week out of the last 5. Here's the fourth failure to push and break through that moving average. So again, near term, momentum flattening below 70. All indications are you just don't want to be bullish, right? If anything, you look to play the pullback, but I just don't want to be buying here in this ceiling that has obviously held for over a month, okay? If we were to push through 95.10, again, where that moving average is again, there's no fighting it for a rally into 96. So the pivot levels are all there. We're kind of lined up right there into the monthly open. These tend to be great plays, guys. So a little patience goes a long way here. Near-term support, 93.89 on the weekly chart is a 2016 low week reversal close. as well as some former swing highs at 38.2 is at 94.20. So this is sort of your key support range. Note that the median line also is in that region over the next couple of weeks. So that's the level to the downside to beat to suggest a little bit more of a corrective stance on the DXY. Any questions on the dollar? Okay. Intraday, real quick. Here's what it looks like. Okay, new high day close, 95.32. Stretch highs are at 95.53. Long story short, here's the turn early in the week. We're testing weekly open support right now. Okay, and we really want to see this thing start to push lower. I'm expecting some sideways action as we head into the US trade markets, just because I don't know if there's going to be enough market participation, guys, heading into the holiday to really break or manifest into any major trends on the near term. So, take it with a grain of salt heading into the US trade session close. Again, that's going to be early at 1 p.m. today, Eastern. Just lighten up, okay? It's not worth it to kind of press something into thin holiday trading. Again, markets will be closed tomorrow, so you don't want to get too aggressive on anything. That being, held, all things held constant, look for some sideways action. Still trying to get on the short side here. I wouldn't put it past this thing to jam into the highs one more time. So all the positioning I've taken, whether it be dollar CAD or whether it be sort of just probing on euro, they've been super small positions, guys. And dollar CAD played out pretty well. I wish it wasn't such a small position, but it doesn't matter. It's better to play cautious until we get a little bit more of the opening ranges starting to pan out for the week and month. Okay, now for the euro, it's, as I said in yesterday's update, it was a little bit too clean for comfort. Here's the daily chart as we head into the close of the week. Here's the weekly first. Let me just show you this. Again, 116 broadly, that low close from November or October, excuse me. Basic trend line support off the lows, the median line, right? All of these things on a closed basis just been rock solid. Right? We haven't been able to make any progress below. So very similar to what we're seeing in the DXY. Again, divergence into the lows, subtle, but it's there. 116 is our line in the sand. Daily chart looked like this. Okay. And here's what it looked like on Friday. Basic key range of support that we had highlighted was 115.30 to 115.54. This region, it's the November close and the 2016 high close. Caught the lows last month, or should I say May, caught the lows last month. Here's the monthly open. You're still your key support, okay? The new low day close comes in now again at 116.03. So everything keeps lining up here for a hold at 116 for this to work, okay? Intraday, it looks like this. And here's what we looked like last night. Oops. So as I said, it looked a little too clean for comfort, to be quite honest with you. Remember, we were working with this slope from last week. You saw that dribble below 115.54, perfect tag of 115.30, and then we recovered to close the week well above and well within the confines of this range. So the start of the week saw, again, resistance right at the 50 line. Pullback yesterday, it's just disgusting. I kind of ended up chasing it a little bit, jumping in late, but it was worth it for a good 20, 30 pips. The focus was right here, right? The rebound, not only was this the 618 retracement of just this near-term advance, but you saw Jamie tweet it yesterday too, guys. It's also the 618 of the larger advance from the June lows. So you got a double entendre, 618. You got basic slope support, and it was worth a shot. You saw a nice reaction there. Again, I ended up chasing it a little bit. Really wasn't good a risk to reward. But we're out basically just ahead of the weekly open, which is right here. Look, the June open is not necessarily going to be a game changer now that we're in July, but watch that push through 116.90. 117.20 is the 618 of the decline and last week's high. That's the level to beat to really validate a reversal. Okay. As Jamie noted, this did look like a 1, 2, 3, 4, 5. Also, really nice 5-wave advance. I worry that we still have another low to make. So, My stops are well above break even on whatever this thing does from here. I'm holding a pitiful amount at this point. But again, if we continue, watch that push through 1790. But if it fails, again, it's the same two regions that we want to see as support. Okay, if it needs to make the correction lower, ideally it doesn't. But if it does, 1590 and 1558, 1560 is sort of where you want to see this thing start to wrap up the downside. Okay, not quite there as far as clarity on the euro. Keep in mind, this does seem like the makings of a decent opening range for the week. I don't like that it is a holiday slap in the middle of the week, guys. That will tend to put sort of, a wrench in opening range strategies and such. But all things held constant, I want to see this thing move higher. 1720 is the level to beat to see the upside acceleration. Now, yesterday in the webinar on Daily FX, I was toying around with this, right? If we move the pitchfork to this low, that looks like a little bit more of a consensus scratch resistance. But, we'll get that. We'll cross that bridge when we'll cross that bridge when we get there. I just want to see how it reacts here. Okay, if it breaks the low to try to make a correction ABC, then this might be the play, and that would be, down here is where you'd look to find some support right ahead of that same support region. For now, I'm just going to work with the slope and see how it moves from forward. One last pullback fits into your DXY forecast, and that's sort of the gist, right? Right, Ty? It kind of works out pretty well. I mean, again, it's not magic. DXY 60% weighted the euro, so it shouldn't be too surprising. But yeah, I mean, those are the two scenarios. Really nimble guy. I really can't stress that enough. Right into the open of the quarter. I definitely don't go full allotted leverage on every trade. Okay. Questions on euro? That is number 2. Charts are full of pregnant patterns, says Ty. It's the way we like it, my man. That's the way we like it, right? The more identifiable patterns, the more conviction that you have on the trade. Okay, let's take a quick look at dollar CAD. That's the other one that we've been following super close. Again, last week I left you off with the weekly chart or the daily chart looking like this. It played out real well, guys. 33.75 ended up being the 50% retracement of the 2016 decline. And while we got a breakout of the upslope, that was the first level of resistance. We started to see some divergence in momentum. Last week, we started positioning on the short side here. And lo and behold, you got that last spike, and it did hold on Friday before pulling back. Dollar CAD last night looked like this. That pitchfork that we had added last week in the webinars, when I was like, listen, we haven't had any plays off it yet, so just don't get too crazy. Well, now it looks pretty darn good. The median line held a support 132.58, 132.60. Well, the retracement wasn't there. It was 132.60 was sort of the first level support. We hit that, pushed through the median line 32.50. Downside targets at 31.65, and if you had your limit at 31.32, you got it taken out. If you had your limit in this range, it did not get taken out. So again, you want to keep your targets on your limits on the inside, guys, just for the sake of risk management. At the end of the day, here's the rebound, right? And last night, we noted, look, as long as we stay below this slope, I still like it lower. Bearish invalidation. So the only thing that would shift my mind away from shorts would be a break above 32.58. Okay, that would be the break of which now you're talking about a break of slope, you're breaking former lows. That's not a good thing. So we're looking to fade rallies below these 2 points. You got a little bit of a bounce overnight. It wasn't very long, but it did break. And certainly downside targets, if I can bring my chart up, have been taken out. So there was the rebound. Got you a really nice, entry. It got as high as 32. The high here was 32.23 or so. So a really nice 20, 25 pipper stop. Looking again for 31.65. Looking again for 31.32. The low was 31.32.6. So, really playing tight with the levels. But Be nimble, okay? Be nimble. Don't get stuck on this. All things held constant, same exact outlook. If the market decides to give you a little bit, again, of a rebound, there's thin trading, no one's really positioning ahead of the holiday. Same thing. You look for resistance, at the upper slope line, bearish invalidation. I'm still going to leave it here at this 50. Okay, former swing lows, decent pivot in price, and that would sort of validate a break of this near-term formation. All things held constant, break lower below 31. I'd still be watching this whole range, guys. Big pivot range. So just be cautious if you're holding shorts into that region. If you start to see some divergence or you start to see some strong reactions, just bail. It's not worth it. But ultimately, a break below 31 opens up the downside for a much larger play. Okay, just based on slope, you'd be looking for a move into this region here, which is right around 30, 40. Okay, here's the daily chart. Okay, here's how big of a pivot region this is. Break saw acceleration, perfect resistance, breach saw acceleration. Here we are, support. So pretty clean, pretty clean. And again, compared to last week's daily chart, on this chart, we hadn't yet added this pitchfork. This right here is the 618 line, okay, of the advance. So a Fibonacci relationship within the confines of the pitchfork, really nice resistance, decent support. And that again converges down here, 2980 is a little bit longer term of a target if we do break. The whole focus right now, forget 30-165 on the daily, okay? Forget that on the daily. Intraday, it still might act as a level of target, but on the daily, the whole focus is on what we do off this level. A pivot to the downside, shift the focus lower. If we do rebound, intraday chart calls for some resistance nearby. If I can bring it up here. Oop. I'm sorry, guys. My charts seem to be misbehaving. That's weird. If the rebound does materialize, the intraday charts call for resistance. Like I said, 3230s, 3240s would be where the slope convergence is, but bearish invalidation at 3260. Any questions on dollar CAD? Levels remain unchanged from last night's update. Nimble, nimble, nimble. Nimble is the name of the game. Early in the month, early in the quarter, early in the week. That's dollar CAD number 3. Okay, I have an exclamation point next to Aussie Kiwi. Why is that? Oh, because Aussie Kiwi hit the last target. Doing my rundown this morning before the webinar. Here's what Aussie Kiwi looked like last night, and the basis that I was talking to you guys was the focus was still higher, but we're basically looking for some sort of reaction into the next upside target. Now, next upside target was 109.84 into 109.96, so a 12 pip range of resistance. It's exactly where we just found resistance. Here's Aussie Kiwi now. First on the weekly chart. So our attention first came to Aussie Kiwi as we were coming off the key 618 retracement here a couple of weeks ago. Took us above the 200-day moving average. Last week, we ripped through downslope resistance near term. I'll show you in a moment. And that kept the focus higher. Basic slope. This parallel, my friends, is all derived from these two reference points. We took a parallel off the low from 2014, saw a decent pivot, a little bit messy here, decent resistance, more or less pivoting on a daily basis. The highs, though, were identical. Take that same slope, extend it to the low that you made from September of last year. You saw one touch. The following week, you saw a second touch, third touch into the close of the year, fourth touch at the open of the year. The break fueled acceleration on the rally. That's where we found resistance. Here we are again. So the point of yesterday's note was, look, it's obviously an uptrend. We're obviously looking higher, but even though we're breaking slope resistance, the yearly open resistance is just higher at 109.96. Just above that at 110.18, you have the former swing highs and the opening range high for 2017. Okay, this also contains the close highs for the year. Big level, big level. okay, huge. So we're looking higher, but as we get into that region, look for a stronger reaction. It's exactly what I told you guys to do as we were looking to that region. So daily chart highlighted that region also with an objective 786 retracement of the near-term decline. Here's Aussie Kiwi on the daily chart. Okay, that's where we were trading yesterday. Here's a basic 618 retracement of the decline from 2017 highs. Yearly open resistance, we gave you 109.83 into 109.96. That was our sort of bigger area of resistance that we were looking for. Price probed right into it now, and the focus now is on a daily close. Failure to push through this on a daily close would have me fading it. Near term, right? It's a breakout trade, it's an upslope, but near term, we're at risk here, okay? So if you're holding long exposures, I'd be out. If you're looking for fresh exposure or near-term opportunities, I'd be looking for exhaustion for a near-term downplay. We're not going to be aggressive on it, but now you're on the back of a 1, 2, 3, 4, 5, 6 day advance. See how many times we've seen 6 day advances in Aussie Kiwi. The last time we saw a 6 day advance was right here. That was the high. We made the high the following week before breaking down. Previous to that was here. Saw a 6 day advance. We saw a 1 day pause before continuing higher. Previous to that was here. Well, that was a messy one. I don't want to look at that. Here, pause, sat at the same highs for the next couple of days before correcting lower. So 3 out of the last 4 scenarios did see a correction. One of them saw a pause before pushing higher. Long story short, all indications are, let's look to see if we hold below this today, could see some short side action on that. Just for a near-term position. Here's what it looks like on the intraday charts. So on initial approach, look at that. It's ridiculous. 109.85 into 109.96. That's exactly where this thing petered out. And right now, the focus for me is exhaustion. You know, momentum technically is still an overbought. You are getting divergence, price action making a higher high on a closed basis, right? The oscillator making a lower high. Now, both reference points are above 70. That's typically a very weak signal, but nonetheless, it is something to pay attention to. And you even have a slope trigger or a momentum trigger. I'd be looking at something like this. It's a 1.234 touch, almost 5 touch. So downside break there would sort of alleviate the momentum on the upside. Any shorts you take would have to be against the registered high. Initial targets, really soft, would be 109.47, okay? But it's really, you're looking for a larger pullback towards this parallel or a basic 236. I have to adjust that for the new high now. So that'd be like 109.14. Okay, don't stress this slope. It's just a pivot. You know, it was resistance, topside break, saw it as support. So I'd just be looking at that, but that's sort of the game plan. Any higher from here, guys, you're looking at the upper parallel, and that's like over 100 pips away. Well, not over 100 pips, but roughly 100 pips away. Okay, so could see some sort of corrective pullback off Aussie Kiwi relatively soon. I am looking at the near-term charts for signs of exhaustion. I don't like these long wicks on the downside here. I was looking at this earlier. You know, if you look at it a little bit, or really in near term, like at a 10-minute chart, looked like it had really nice divergence here and a decent trigger to the downside. You know, this materialized early in European trade. I was fast asleep, but that was a decent trigger for the initial short. From here, again, stops would need to be against this high, ideally against the yearly open high. But we want to see momentum start to probe a little bit more below 40, and then when it rallies, I do want to see a hold ahead of 60, and that would suggest again that the near-term momentum profile is turning over. Remember, guys, this is just a pullback play. This is a wildly bullish chart. There's really nothing to get too aggressive here yet. Questions on Aussie Key? Finding resistance right in that sweet spot. Let's see if we can't get a hold and a move lower. So we just moved higher. We're probing right here. Questions on Aussie Key? That is number 4. Okay, let's do a quick reversal here and jump on Aussie dollar on the back of yesterday's RBA interest rate decision. Here's what the Aussie looks like. Typically my favorite trade. I've been, a little chicken about this trade because every time it approached 73.27, I got all excited and tried to fade it, and it just wouldn't last. Even last week's play was brilliant, and it moved up awesome, right? And then this, what the heck was that? Again, right into the open of the month, you're gonna get these adverse jams, right? Repositioning. Guys who closed out the shorts on Friday who still want to be short, fresh new month, they just jump right back in. Boom. So look, if we materialize a close above the opening range highs, a close above the monthly open, the weekly open, certainly would bode well. 74.12 is sort of my line in the sand. Do want to see a topside break there to start to materialize. Got to take a new retracement to the new low that we just registered. So quick update on that. And the upside targets as seen here. On this one, guys, I'm just really hesitant to get aggressive on. 73.27 was a big line in the sand for me, and you guys know that is represented clearly on the weekly charts as the basic 618 retracement of the entire 2016 advance. It also represents the exact swing low that we made in May of last year. So like, I want to see it hold here. I want to see price hold here. And the last 3 weeks have been damn near, very fake outs where you think this thing just is going to collapse, and then we right into the close of the week we jam higher. If you put a pistol to my head, again, just an analogy I always use, guys. No one ever puts a pistol to my head, but if someone were to put a pistol to my head and tell me what do, I would still say buy, throw a stop against the low, and look for at least a breach through 74.80 to get the upside going. That said, guys, that's more of a bet. It's not more of a educated technical trade. And from a risk reward standpoint, you just don't have it right now. You're gonna put a 100 pip stop against this thing. If you're cool with that, great. I'm not, right? I'm not. So let it pan out. Ideally, you make some sort of stretch into the slope resistance. You get the pullback, take the retracement, look for a 50, a 618 pullback, stop against the low. And let's see if we can't get some upside on Aussie for a little bit of a rounded bottom play here. But the conviction, guys, just isn't there yet, period. And I love Aussie. So as soon as I see clarity here, I will be more than happy to point it out. Right now, it's just not there. It's a little too early in the month, I think. Also, ideally we get some slope, some clarity on a gradient to work with. I don't know. Maybe we find some support here. Over the next day, heading into the close of U.S. trade today, open of Asia, it converges, the median line converges on that downslope resistance. So maybe some sideways action here before the breach. That's all just conjecture from here. We need to see price action start to develop. But that's sort of the game plan for me right now. I would love to fade weakness while above 73.27, that godforsaken level that we've been talking about for months now. And again, 73.28 is the former swing lows from last year. So I do want to see this hold. I do want to see some sort of corrective bounce higher in Aussie. We're not talking full-on reversal. Aussie made some pretty damaging moves earlier in this year with this break and even retest of a long-term slope support. So the trend is down, but it'll only be down in the immediate term for so long. I think at this point, the weekly divergence that we've been highlighting the last couple of days on the way down, a basic key 618 retracement, you know what I mean? It's straight up just support, guys. It's gonna bounce. This is the spot. Questions on the Aussie? Keeping in mind, guys, all the event risk for the dollar is stacked up towards the end of the week with non-farm payrolls, right? All right. That is number 5. Number 6, sterling. So, support. Where is support? Jamie had an entry at 31.30 for you guys last night for the swing trades. It's all about the daily chart, in my humble opinion. Okay, here's you don't even need, you can even look at the weekly chart. Here's the weekly chart that we presented into the close of the month, and this is the focus for me, was all about this, on whether we were going to hold this downslope. Look, you have basic downslope support for formation just off of this year's highs. Okay, the lower parallel on a closed basis, perfect support into the May close. On a closed basis, perfect support into the June close. To open up the month, here we are again. This is the daily chart. This is the daily chart. Excuse me, guys. This is the weekly chart on the right. Same level. Okay, 31.64. We haven't been able to close above, below that level. DXY, right? Same thing. 200 week moving average. Haven't been able to close above. So what do you do when downtrends get stuck at support and when uptrends get stuck at resistance? For me, as a near-term trader, I'm playing those bounces every time we get a rebound off of it, right? Real short, real nimble, 20, 30 pips, quarter the average ATR, no problem. I'd rather nibble away at a big sharp than try to take a big chomp and risk not even getting it down my throat. So really nimble, but same thing here on the pound. If I had to be in a position right now, I still think you play the rebound. Maybe that's just me being stubborn, guys, but I mean, the charts pretty much speak for themselves. This is the 3rd consecutive week we've been trying to probe below this region. Daily chart looks like this. Okay, and again, last week's chart, although that low didn't hold, on the secondary low that we made, again, guess what? Here we are with a 3rd touch again of this slope. This parallel you see here in red is the same slope, just extending off the May low. And that literally caught the low last week. Note that on all 3 consecutive drives lower, you've made divergence in price. A higher low, and this maybe not a higher low, but an equal low. That is a higher low, right? So a series of 3 reference points, higher lows, price action, 3 reference points, lower lows. Again, it suggests momentum exhaustion. Intraday looks like this. Now, I need to get a little bit more conviction on working with an upslope. I was looking at this yesterday. It seemed too aggressive, but I'll show you what I was looking at. This. It seemed too aggressive for me, but I mean, look at the reaction you got there. So again, it's a full circle. Here's your weekly open. You made a full weekly opening range. You're coming full circle. If we break the 50 line, I'd be comfortable tacking on a quick retracement off the highs. Need to adjust these levels now to reflect the new low in price. And a basic 236 comes in up here. Okay, this is from the high that you made in April. I guess that's the yearly high. Yeah. So it takes into account all of 2018 price action. I would be watching. Whoops. I would be watching this median line too. Okay, for the downslope, resistance, resistance, converges on upslope resistance. If this is in play around 33.40, okay. I mean, I want to see price hold 31.65, but if this is going to be, again, if this is going to work on a pullback towards here, guys, look for support, stop against the lows. Let's see if you can get the up move. But that's sort of my thinking here with pound. It's notoriously professionally traded market. It's known for the throwovers, the break of support, the false break reversals. It's loaded. Everyone knows this about this thing, guys. So everyone on the trade desks everywhere. So leave a little bit more cushion here, but be a little bit more meticulous with your entries if you're going to try to play the sterling pullback. All bets are off. If we break 30.60, all bets are off. Okay, this thing is just flirting with disaster. Downside break below this level, you're basically looking for like 128.70. Questions on sterling? Again, you're pretty limited on sterling data heading to the close of the week, so look for dollar to be driving here. Okay, so those are the major dollar setups I'm covering, guys. I kind of breezed through them today because a lot of them are kind of still in the same range that we were talking about. Do let me know if you have any questions or trade setups you want to cover. Just to go over some of the basics that we have been covering on some of the larger commodity trades with gold. What is this here? Is this going to materialize in some sort of outside day reversal? Remember, gold on the weekly charts has been crucial. And before the week opened, in yesterday's webinar, if you were with us in the free session, we were talking about big support at 1245, which was the 50% retracement. Okay, I've removed it since then, just to show you, 1245, 50% retracement, and also the swing lows from late last month, or what is this? Excuse me, this is the weekly chart, late last year. Okay, the December lows, 1236, 200 long week moving average at 1235. So 1235, 1236 is your final last ditch effort. If we break below this, you're looking at 1215. Slope doesn't even come in until about 1204. Could be really bad. Could be really bad. Also keep in mind, we're testing a break of the prominent upslope support. This is a parallel again of the pitchfork we've been following since 2013. Perfect touch of the parallels on the upside. Really nice pivot along this parallel. Support, support, support. You know what I mean? This thing is flirting with disaster. Now, if the dollar finally does correct lower and give us that pullback, that would bode well for gold prices. But is that enough to start fighting this trend? I wouldn't say so. Gold is known to be one of those trades, guys, that when the train leaves the port, boy, does it leave. This is a weekly chart. I remember this vividly. Remember the start of 2016? This thing was just insane. It was ripping. And then again into the close of 2016, the same exact thing happened. So, if it does materialize and this break is legit, the median line break is legit, this could just waterfall to the downside. I'm of the mindset near term that you actually close considerably higher in the week and the price preserves this median line on a close basis. That's my sort of hopes for this week. So we're there right now. Off that slope, I would love to see some sort of bounce, some sort of corrective action. Maybe not all the way up to the 50 line, but definitely some sort of alleviation near term are my hopes. Here's what it looks like on the daily chart. Okay, daily momentum is looking to recover back from oversold conditions. If we do close above 30 today, that would be an indication, or that would be a long trigger, essentially. Or at least alleviate the immediate downside bias. And then, you'd look to start on a little bit more of an abreast to the upside towards 1266 is where the slope is. Again, I don't know if we get all the way that high. We'll have to reassess if we get the rebound to near-term levels. But right now, I'm looking for this thing to defend 1245 again. I want to see if we can hold above this heading to the close of the week. So what does that mean, Mike? What can I do on this near term? Well, here's what the intraday chart looks like. This was the pivot region we talked about in the webinar yesterday. It found a support there. So how do you trade this? We approach it as every other trade. Ideally, you break 60 here for the first time in a couple of weeks to the upside. And then on the pullback, we find support ahead of 1245. You get a stop against the low and you look to play the recovery. Again, 1266 keeps coming up as a big level. So that's sort of your first major area of support, or former support, now resistance. Okay, trading the turn. Again, I feel like I'm tempting you guys to do something very aggressive, but nimble is the name of the game. We're at support. Okay, it's not necessary that all these rebound plays we're looking are actually going to materialize and mature into larger trends. All we're saying is that you're approaching some downtrend support. An interesting trade that we haven't talked about in quite some time, but I had an interview with an Australian agency yesterday, and they were asking about copper. Here's what the copper chart looks like. It's pretty wicked. I actually talked to them about the weekly charts. Here's what it looks like on the weekly chart. Look at this thing. So not only have we broken upslope support, okay, you can argue all you want the contentiousness of how accurate this slope has been. The median line has been decent. This was decent on a closed basis. You can see it a little bit clearer, right? Support, support bounce, break, acceleration. These two reference points kind of don't look right, but if you tag a parallel, it's not that far off. Okay, so long story short, it looks like it wants to break or it's testing a break of that slope. We were working with this series for over a couple of years. This is off the 2016 lows. Again, extended off these lows, perfect support, acceleration, resistance, acceleration, support, support. Extending off that high again, resistance, 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 acceleration, support, support. All of that converges on the 52-week moving average, and we broke below that with authority 2 weeks ago. So now the game plan, or now the focus, is all about these swing lows, former swing highs, former swing lows, former swing lows. Big pivot region. So for anyone trading copper, it's make or break this week. If you don't find some sort of support bounce here, this thing is heading right down to 279. Okay, so quick outlook there on copper. I know we haven't talked about this recently a lot, but certainly tempting a break of a pretty big move here. So that is gold and copper. Okay, the abomination. Where is dollar yen? Here's dollar yen, how we highlighted it heading into the close of the month, talking about 110.69, 110.88 on the daily basis as being resistance. The whole weekly range extends into 1165. So this is the big, huge pivot for price. We played the downside a couple times off of approaches here. Now we're probing it again. Here's dollar yen on the weekly charts. 110.88, 111.65 is the level of which we want to hold see resistance if this whole down slope is to remain in play. Momentum sub 60. What do you do? Nothing but look for exhaustion ahead of 1165. Here's what it looks like on the daily charts. Today materializes into an outside day reversal. Would bode well, specifically because daily momentum basically scratched 60 and failed again. So would be a good indicator. If we close today, ideally below 1069, but for it to constitute an outside day reversal, it needs to be below 110.59, which is the actual low day close, or excuse me, the close from yesterday, the low for yesterday's candle. So that's where we need to close. Either way, with NFPs heading to Friday, holiday trade, I don't know how aggressive you want to be on this, but this is a big 100 pip region. Resistance could play anywhere in this area. Here's the intraday chart. Not very clean. Just to put things in perspective, these are the slopes we were working with until the start, or until the close of last week. Everything's been super clean, actually, which is weird for dollar yen. Resistance, lower parallel, break, parallel resistance, parallel resistance. Okay, a little bit of a snap, no problem. Break, lower parallel, again catching support. The median line here looks like you're still struggling. So on the break of something like this, you would have wanted to see acceleration into 111.35. There's 111.65, a key region. So, you've been playing in a what, 40, 50 pip range since the start of the week. There's just no play here. If you get into 1165, 1150, 63, 1135, excuse me, 1165, look for to fade such a move. If we break lower, if you get through that parallel, maybe look to fade rallies. I just don't know. This is just a low conviction trade for me, guys. All I know is that we're into resistance. The kickbacks have been good, pretty decent for the last couple of attempts to break through this, but we're not quite getting that, that low tolerance in price at this level anymore. So just use some caution. If that high does hold, that would be your first objective move. Former swing highs, support, acceleration on both sides, 38.2, and slope. The abomination. Let's see if it could start to make a move. I'm not touching this thing until we get some clarity on momentum, until something starts to happen. 5, 6, 7, dollar yens, number 8. Okay. What else was on Friday's update or Thursday's update? Dollar CAD we went over. Kiwi. I know Jamie's still interested in this one, guys. Don't forget, by the way, midweek strategy webinar is going to be early. It's going to be today at 11 o'clock. Obviously, tomorrow is, like I said, 4th of July, so Jamie wanted to get that in before. So definitely probe him on this. I think he's got a better grasp of things than I do on Kiwi. But for me, here's the daily chart. I guess the problem with me is the weekly chart. Here's weekly Kiwi. It's a 618 retracement of the objective rally off 2015 low. So multi-year, fib consideration. The 100% extension of the larger decline. If this is just simply corrective ABC type of two equal legs, give you 66.60, 67.16. So 50 pip range of support on the weekly chart. I know that doesn't help you from a trading standpoint, guys, but just relative to the fact that we could find some support within this range this week. That's sort of the only thing I'm looking at before trying to attempt this. Daily chart. Excuse me, this is a 240-minute chart. Here's the daily chart. There's that 618. Technically yesterday we were basically right there at the close. So there's not enough information and price for this month. Obviously, the monthly markers I haven't moved yet, guys, until we get a couple more days in. But here's your monthly marker open. So your monthly open is up here just below this key support that we were looking at is now key resistance. Breach above that is what would shift the broader focus to more of a constructive play for Kiwi. Other than that, it's really precarious. I wouldn't be surprised if this thing drops into 66.75, 66.60 again before it turns to satisfy that 100%. But it's an oversold still on a daily basis. I'm not going to try to fight it. Intraday, here's what it looks like. There is some symmetry to the downslope here with this parallel extending off the lows. Looks like it did a decent job of catching it overnight. Divergence on those two lows, price action with a lower low, the oscillator with a higher low, does mark reversal or suggest exhaustion. If we make it through 2017 lows, the weekly open, okay, that's like 67.90, 67.80, that's would be constructive. But again, the problem is you're running right back into that huge pivot at 68, 68, 11, 68, 28. So for me, guys, even on the upside, I mean, the levels are clear, but they're just too tight. They're just too tight to try to fight this just yet. So let's wait a little bit on Kiwi dollar. I think you do get a little bit more clarity on this week. But it's definitely one of the pairs that sort of have just been pounded over the last couple of weeks. So don't want to fight it yet, but we are noticing that we're approaching some levels of near-term downtrend support. Dagon saying, nice to wait for a short near the 2016 Open. If I was going to short it, Dagon, that would be the first area I would look. You know, the concern, Dagon, is that if we do base a low here, that would be the marker that would shift us constructive. I don't know if I'd necessarily want to short it again from here. I'd more so want to see this break and it hold as support to buy, right? Because if the dollar is going to pull back from resistance and we're going to get that little bit of a recovery, then the game plan would be a breach above this to invalidate the short side. On a scalp basis, if we pop up higher into here and you see divergence and it was going to move lower, that would be the entry. That would be the entry, absolutely. But that's my concern, is that if it does base, if it does make us drop lower first and then rebound into here, it could kind of bounce off this. You could get a decent short, but then if it rips higher, that would be reversal off of slope support. So for me, the first things first, like ideal scenario, we get that drop into 66.60, 66.75. If we don't, look for a reaction here. This is sort of the pivot. Does that make sense, Dagon? Probably to buy in the 20. Oh, yeah. It says got it. Thanks. Okay, cool. Cool. Yeah, the buy in the 2016 Open would be if we breach and pull back. That would be the buy. But again, for me, again, you know, probe Jamie on this later today. For me, Kiwi is one of the lowest conviction trades for me. I mean, that was it. We were focused on this last month. Remember, playing the long actually off of that rebound from a key support, major pivot in price. I mean, again, don't take my word for anything. Look at price, support, false break, sure, but we had building divergence all into that low. So support again. Is a perfect daily rebound. Only lasted for 3 days before pulling back. So pretty clear-cut pivot in price. All right. Last but not least, Swissy, I've kind of lost interest in, but here's what the daily chart looks like from last week. We haven't really changed it. The only thing that we focused, the focus change was taking the new pitchfork using the new high that we made there. I don't know if this has any merit, guys, but it keeps the focus still lower against the 99.83 threshold in Swissy. That's just something I'll be tracking. I have no interest in putting positions on that at this point. And the last other thing is crude. So crude prices are going to continue to make headlines over the next couple of days. They have broken to fresh 2018 highs. The whole level for us, guys, was 70.40 into 70.21. You've heard us talk about it at length. It was a major area of resistance that we were probing here. Just so happens that that high tagged support tanked right back to the downside on the breach or the reversal. This was, you know, clear cut was all we were focused on. Once we closed above, first level, just the previous swing highs. Second level, 2011 low has now been tagged. Okay, that also converges on, once again, slope. Momentum's at 70. Could we get a kickback from here? Sure. Is the trade still constructive? Absolutely, above 71.21. And topside break, you're looking for 77. You're looking for 80, 89. I know that sounds insane. It's going to suck for gas prices, but those are the levels if we break higher from here. I just do want to note that this is testing now uptrend resistance. So a lot of the trades that we were looking at with the dollar, testing uptrend resistance, the euro, testing downtrend resistance, right? Everything's testing the broader trend, support or resistance in that directional bias. So we have to be super nimble, trying to play the reversal if we do, but we also have to, you know, be cognizant of where we are. And if you are holding long dollars, it'd be a good time to try to shave some of those off. If you're holding long commodities, I shouldn't say commodities, if you're holding long crude, a good level to expect maybe some pause. I would not short this thing. but definitely if you are long, 75 is going to be a psychological level. Again, those 2011 lows, add to that you have some slope. Now, if things do accelerate and we close above the what is this, 75% line, the 50 line, excuse me. If we close above the 50 line, I would expect to see serious acceleration. Okay, a break of upslope resistance typically will see acceleration, right? Upslope resistance, break acceleration. So if that gives out, 77.26, 80 might not that be all that far off. So fill up your gas tanks as soon as you can before that starts to filter down into gas prices. All right, guys, that's everything I got on my end. If you have any last minute questions or trade setups, feel free to throw them on the message board. Otherwise, don't forget, Jamie will be up at 11 a.m. Just over an hour and a half here with the midweek strategy webinar. Again, for everyone who's on the stateside, enjoy your day off tomorrow. Happy Independence Day, happy 4th of July, and we will pick things up back on Thursday morning. Again, we get the ADP release, which is the precursor for Friday's non-farm payroll. So lots of event risk stacked up into the close of the week, guys. Best of luck. Thanks, Dagon. Appreciate that. Happy 4th to you, too. See you guys on Thursday. Cheers.